Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 1st. My name's Eric Wilkinson and you might recognize me from mainstream media as the Wolfman. I'm here to teach you how to implement option strategies. Anybody can teach you how to build an option strategy. Implementation is the key to success. Please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. And I will be honest here, it is not looking good. Time to pivot in my economic outlook. As a matter of fact, retailer still seems to be strong. 70% of our economy is driven by the retailer. They feel strongly about the economy, but the purchasing managers of the manufacturing sectors, not so much, you guys. All right, so we talk about this all the time. Flash PMI across the pond is the most important economic data point that I look at because it is so forward-looking. Now, they have seen recession. They are actually, quote unquote, in a recession because we've seen that go below 50 3 times in a row. Here in the United States, we've seen it now 2 times in negative territory, or below 50 is not really a negative reading necessarily, but our ISM, Institute for Supply Management, manufacturing PMI number came in at 47.8, was expected to be 50.4. Anything above, like I said, is expansion. Anything below is contraction. 47.8 is the lowest reading we've seen since like June of 2009. That means we've gotten 2 in a row. Third one is a solid we are in recession basically mode. Construction spending came out at 0.1%, which was lower than the expected 0.5% increase. So not so great there. And then the prices paid came in at 49.7, expected to be 50.5. So the prices paid did increase a little bit. Maybe a lot to do with the prices, that these manufacturers, it obviously is the prices these manufacturers have to pay for the products, steel being one of those. The tariffs may be starting to leak in there and causing those prices to increase. We don't want to see those prices increase as we see the manufacturing PMI go down. That is not really a good thing because that's the inflationary aspect on the prices, and they aren't able to move inventory then. But what I did mention is we're seeing like home sales and things of that nature doing very well. This is almost a sure sign that the Fed is going to have to cut interest rates and start making a little bit more easy money, weaken the dollar. The dollar strength is a part of this. We're seeing exports at 41 was another number you don't normally see in there, and I don't normally talk about it, but it's interesting to note here that number going down, but that's because of the dollar strength. People aren't able to afford our products, okay? It makes it cheaper for us to buy things or go on vacation in Europe, but as most Americans don't do that, it is really a cause and effect of how the global purchases of our products are going to work. If it's cheap for them to buy our products, that means we have a weak dollar. So the thing that's going to be looking quite possibly is that they are going to be cutting interest rates, and maybe even a little bit more dramatic. Maybe Bullard is on the right track there. I was fading Bullard for quite a while, but maybe a 50 basis point cut is in order now at this point to try and get this spurred. I think that really, rather than maybe a cut, I can't deny the cut at this point, but maybe tax cuts or something like that to spur some spending amongst the retail investor and stuff like that. The middle class would surely enjoy something like that. They don't really see it coming at this point, but that might not be a bad idea, again, to start maybe doing some tax cuts there to try and spur some spending. All right, let's talk about the overall economic data is over. Let's talk about the markets. Levers and pulleys are in full swing, just as we would expect it. You can see here, crude oil coming off right down into that area where we talked about yesterday. I want to see it down into the 50s. I don't want to see it going too much below 50s because then that really hurts the U.S. oil market. So mid to lower 50s is probably the best sweet spot, I think, for everybody involved. That being said, we're seeing that oil come off as future expectations of demand in oil is going to start going down with the economy. Here you go. After seeing gold really slough off yesterday, one of the lowest levels we've seen in a couple of months, we're seeing that rebound happen. Why? Because expectation of a weaker dollar going forward drives demand for the safe harbor products like gold. I would not be surprised at all if we really see gold. It's going to, I'm almost a sure thing that we're going to see gold move back up into the 1500 handle. So I'm looking to play that to the upside. It's got really high implied volatility right now, so I'm probably going to be looking at selling some puts in GDXJ, GDX, the junior gold miners and the major gold miners there. So I haven't gotten to that yet. Been doing a lot of reading this morning and haven't really made a whole lot of adjustments. I'm going to be very worried about the downside in the equities, but with the bonds you can see moving higher. Again, almost a full point higher in the bonds, and that is because it is almost a sure thing that the Fed is going to start cutting. They were talking they were going to hold off. I think that rhetoric is out the window. Fed is going to start cutting relatively soon, probably before the holiday season, before the Christmas season. I think is probably what they're going to be thinking they need to do, because we don't want to crimp spending into this major holiday season. And if you've been to Costco or anywhere else, they are already starting to pull out the Christmas stuff. It's not even Halloween yet, and we're seeing Christmas stuff. So the thought process is going to be, let's try and spur some spending heading into that. At least that's how I would approach it. VIX moving higher because we're seeing the Dow down and the rest of the equities down. There's almost no holding back. There is almost no green bars on the candles anywhere. But Dow's off 285 points. Well, that is also after we saw the Dow Jones before this economic data point was up almost 160 points. So, that is being said, we're off about 400 points off the highs. Here we go with the NASDAQ off 60 points almost. Down to the value area. We might take a pause here, but I could really see this extending a little bit further unless we start seeing some positive news. Again, we just turned into October, so something we've got to be thinking right now is the employment numbers coming forward. That is going to be key. I think with the manufacturing sector PMI coming in below, those purchasing managers have had to have been indicating they're seeing the economy start to slow, less orders coming in. Therefore, I'm sure they are going to start looking at holding back on some of this hiring for at least, long-term employment. Yes, people are going to start ramping up for the holidays. We've got Halloween that the retailers are going to start hiring for, but those are short-term jobs going through maybe from Halloween and through Christmas, but it isn't going to be anything where somebody is getting a long-term job. Okay, so I'm now looking for this to start coming down. Yes, we do have the point of control right here, but I could easily see us start working our way back down and looking at the 74.50 area as support. I believe that might hold there. I don't think that the economic data is like we're ready to throw the baby out with the bathwater at this point, but I do not see these all-time highs happening right now. That is most likely out the window, at least for the near term, unless we start really seeing the Fed talking about a 50 basis point cut. That could cause the markets to move higher, but at this point, without any Fed talk, some of these Fed governors are speaking, like we have Claire, we got Bullard speaking. I think somebody else spoke earlier today. So we're seeing a lot of that happening. Something also to keep an eye on is the vehicle sales, which is happening throughout the day. Keep your eye out on that, because that's going to be one of the first places the consumer starts to hold back. But again, that's not a forward looking necessarily. Those consumers, like we've talked about, are still confident. The manufacturers are the ones that are seeing the weakness right now. So the all-time highs in the NASDAQ, Dow Jones, and like I said, even the E-mini S&Ps here are out the window. Again, we've broken through this line here, the 23 Fibonacci, out of those 3,000 3000s are not going to happen. Next stop is maybe settle down here, but again, I think we're going to test the 200-day simple moving average. That lining up with the 38 Fibonacci and 2833 is really kind of the target that I think we're going to go to. So like I said, I've got most of my portfolio set up for a big move to happen. This is probably one of the starts to that. So I'm going to leave my portfolio the way it is. I might be looking to add some longs in gold somewhere, or some gold exposure to the upside, maybe even some bond exposure to the upside. Like I said, I haven't gotten to that yet, but that is lockstep down the road. And I am most likely going to be quick to cover my XLK that I put on yesterday because, excuse me, tech is not going to do well either. This is the chart of the E-mini S&Ps, and as you can see right here is where we got the ISM PMI released right there. Boom. We did get a green candle in there. It's tucked in right there, but you can see that that was only for a moment, and then the broader markets came in and slammed us down. We did get a pause there as people tried to, hope and pray that if we held that 2960-ish area, that the bulls would try and get that to move higher. I don't know that we're going to see any sign of strength before we see the economic data on the non-farm payrolls, all right? So like I said, I am looking to cover XLK today. I've got a couple working orders in there. Wanted to get this out of the way, talk to you guys about this economic data point to get this going. And I am going to run over there and start placing some orders, all right? So that's all I've got for you guys today. Check out the webinar on Thursday. It's great. It's like I said, it's about implementation. It's not about how you build a strategy. A put spread, a call spread is not just going out and buying a call and selling a call to finance it or anything like that. Those are the basic building blocks. It's like having two Legos. Yeah, you have two Legos, but to build a house or to build the Millennium Falcon, you need some rules and some guidance in there in order to implement the right strategy to build that thing, okay, to make sure you're successful. So check it out on Thursday. Go to protraderstrategies.com. Also, give us a thumbs up on liking our Facebook page at Pro Trader Strategy as well. All right, that's all I got, other than if you can't take that, take it easy.